Hey, welcome back to The Dive. Today on the show, we have the founder of JuniorMiningJunkie.com, David Erfle. He's going to share his thoughts on the collapse of FTX, his takeaways from the US October CPI coming in lower than expected, what a Fed pivot looks like, if he thinks it's a good time to invest in junior miners, where he sees the gold price heading next, what type of gold exposure he likes, and some of the stories that he's following closely at the moment. But before we bring David on, do me a quick favor, and if you like content like this, just go ahead and subscribe to our channel by hitting that red subscribe button below. Hey David, welcome back to The Dive.
Hey, how are you doing, Cassandra? Great to see you. Thanks for having me on again.
I'm doing well, thank you, and thank you so much for joining us today. So we have to start off with crypto. The second largest exchange, FTX, has filed for Chapter 11 bankruptcy, and we're waiting for the other shoe to drop. Where do you think this goes from here?
Oh yeah, there's lots of shoes going to be dropping. I mean, this is even far worse than what happened with Madoff. Because okay, Madoff reamed some millionaires. People were like, okay, I'm fine with that. But this thing, it got in, the average blue collar worker, the average people, 20 billionaires were suckered into it, countless millionaires. They show this TV commercial, during the Super Bowl, like it was like they're selling car insurance, and there's no accountability. And all of a sudden, everybody who bet into this big time lost everything overnight. And it's not like anybody should be surprised. I mean, the Terra Luna thing was the first shoe to drop. So, there's the fallout from this is going to be epic. A lot of people are going to get hurt. And it's going to be really ugly, and more regulations is going to be coming to the crypto sector.
Okay, so let's shift gears here. The October US CPI came out at 7.7%. What were your big takeaways from the inflation data?
Well, yeah, everybody was expecting, a hot report again over 8%. It was well below estimates. There was a lot of shorts in the market. So, this is a big, huge short covering move in just about everything. The gold price was sniffing it out beforehand, and it started its move a little earlier. The gold market is famous for doing this. It had this move down below critical support, and, it ended up being a false move bear trap, which is usually the way these moves down in gold, which is in a secular bull market since the turn of the century, happened.
Okay, we're going to come back to gold in a minute, but first I want to ask you, we often hear the term Fed pivot from the press. At this point, do you think that a pivot means to simply stop raising rates, or do you think that we could see a full reversal in the next year?
Well, basically the market is already factoring in this pivot, because when the Fed came out, when the CPI report came out, it was a lot lower than people expected. So a 50 basis point rate hike was immediately begun to be priced in, and that's lower than 75 basis points. That's going in the opposite direction, which is what the market wanted to hear. And a huge short covering rally ensued, and it's still taking place when that came out. So I think as far as the pivot's concerned, the market feels that the Fed is already going towards that pivot, and now they expect that pivot to happen in the early part of next year. But if the Federal Reserve comes out and in the last meeting of the year here in mid-December and starts talking tough again, that inflation is still really high, we still have to continue to work to get inflation down, and maybe hints that the Fed's going to continue to be really hawkish, and maybe another 75 basis points rate hike is in the cards if the CPI rate turns around again, because basically the Fed looks at the PCE report, not the CPI report. So the PCE report PCE is about over 5% now. So if the PCE comes down, then the market's going to look even more forward to a pivot.
Okay, so let's move on and talk about junior mining. It seems like the junior miners haven't received much attention lately. Do you think that it makes sense to be investing in juniors at this stage of the market?
Oh, absolutely. I wrote an article a little over a month ago, 5-6 weeks ago, about how the gold stocks bottom every 7 years. They have this major bottom every 7 years. The first major bottom was at the turn of the century, when the secular gold bull market started in 2001, had a major bottom in 2008, had a major bottom in late 2015, and you've got a major bottom now 7 years later in 2022. And a lot of these stocks, they've been thrown away, the sector's been left for dead. The Wall Street Journal put out that headline story that gold has lost its safe haven status. That was the loudest bell for a bottom that you could hear, because a week later, gold actually bottomed. So, we've got a triple bottom here now at 1620. Gold blew through 1750 resistance like it wasn't even there. And it looks like it's going to be testing 1800 real soon here. We got a PPI report, producer price index report, coming out tomorrow. So that might be enough to get it to 1800.
Now, recent reports show that central banks purchased record amounts of gold during the last quarter. Do you think that gold will start to gain even more attraction from central banks if recessions kick in?
Absolutely. Central banks, smart money, retail investors, dumb money. At the time that central banks were buying the most gold they bought in over 5 decades, retail was selling their ETF holdings. Q3, the last time gold was purchased this much by central banks was in 2000. The Q3 of this year was the largest central bank purchase quarter since 2000. And what happened in 2000? Gold bottomed at 250. So, central banks, they see what's coming. They see a recession coming. They want to have more gold on their balance sheets.
Given the macro backdrop, what type of gold exposure do you look for? Physical, miners, royalty companies, ETFs?
Well, I made all my physical purchases nearly 20 years ago. I don't buy physical gold anymore. I don't buy physical silver anymore. Now I basically have my leverage in junior companies, in junior mining stocks. Basically small growth oriented producers, developer explorers, and some early stage explorers. So that's where my leverage is, and that's where my area of expertise is. So I built up quite a bit of cash into a month or so ago, and I've been deploying the rest of it over the past few weeks here, because I think this is a major bottom.
Okay, now, David, before we let you go, do you care to share the trends or stories that you've been particularly focused on as we're in the final quarter of the year?
Oh, sure. There's going to be more election drama, because this thing is a lot tighter than everybody expected. We might not even know the outcome for a week or so. So there's going to be more drama around that. There's going to be more drama around the Fed. The last Fed meeting is the middle of December. Basically the expectation for the Fed to raise another 75 basis points before that CPI report came out was about 50-50. And then right after it came out, now it's 85% that they're only going to raise 50 basis points. So what are they going to say when they come out and they raise 50 basis points again, in the press conference? That's, in the press conference, that's where the algorithms set their trades to whatever key phrases that he's going to say. And that's basically what created the false move lower before this huge move, $150 move in the gold price. Was algorithms selling his hawk talk during the press conference after the last rate hike, and then gold turned right around afterwards. So it's going to be interesting to see how it shapes up into the end of the year. But the level to watch on gold now is the 1750 level. I think that level is going to hold, and if it doesn't, it's probably going to come down to the 1700 level again. I really don't see that. That is a very real possibility, though. So I would look at the 1750 level on the downside. On the upside, 1800 to 1825. If we get a close above that level at year end, that solidifies the bottom in the gold price trend.
So, David, could you let our audience know where they can go to get more of your commentary?
Sure. I put a weekly column out on Kitco every week on Fridays. And also you can find me at www.juniorminerjunkie.com. That's my website.
Okay, well, that's all we have for you today. Thank you so much for joining us and sharing your expertise with us, David.
Absolutely. Always a pleasure to talk to you.
Thank you all so much for tuning in today. We will be back again tomorrow, so make sure to hit that notification bell before you leave so you don't miss out. Bye.